G'day everyone, welcome back to Pete's Investing. Today is June 18, 2023. This is the spot gold price update. On our weekly we're in a neutral positioning, so avoid taking long or short trades. We need to make sure the weekly and the daily are aligned. Likewise the daily showing neutral, so avoid taking long or short trades until we see more consistency on both the weekly and the daily. Looking at each of these, got the neutral positioning because the CCI 150 and the moving average of the price chart aren't aligned. So it's giving us a neutral signal, meaning undecided. On the daily, likewise, it broke up from a bearish signal. And you'll notice we did have a bearish CCI divergence versus a bullish on the price chart. That happened a couple of months ago. And what it does is when it breaks below this ascending trend line, which it did back there, our initial target would have been the first two Fibonacci ranges, which it hit. It actually penetrated into below the 50% level along this support line at 1932, and it's been tracking sideways since then for the last almost a month now. If I zoom into the hourly though, you'll notice the different divergence here, and this is independent from the daily. There's a bullish divergence on the hourly here versus a bearish divergence on the price chart. Now, for this to fail, we need to see the CCI break to the downside and also the price to break to the downside as well. But what you'll notice is the CCI has actually gone sideways and the price has continued to go sideways as well. So what we're going to do here, we're going to extend these. You'll notice here, if we extend that trend line, that dotted trend line, you can see there's still a bearish movement and the CCI is still a bullish movement, even though there's a bit of a false break there. So if I zoom into that, you'll see there's a clear bullish momentum on the CCI with higher highs along the whole trend period. So the way to read that is we're still looking at a bullish momentum on the CCI versus a bearish momentum on the price chart. So we're going to actually keep that in there. This Fibonacci range in terms of targeting still remains. So as soon as it breaks, if the price breaks above this trend line and the CCI continues to the upside, then we're going to see this start playing out. So that target area is still valid because it's still within that trend line area. We could possibly put a target area, because I like to choose a target area that's closest to the breakout. So we could actually lower that target area, but that's a bit too low. So I'm actually going to extend it to those two target areas between the 38% and the 61%. So if it breaks above this trend line and the CCI continues up, that'll be our initial target area. Otherwise, for this to fail, we need to see it conclusively on this CCI. We need to see the CCI, let me maximize that again. We need to see the CCI continue to the downside. So in other words, we need to see lower lows where that low was. So we need to see it somewhere down here, in which case that CCI turned into a bearish momentum. And likewise the price to also continue to the downside. So we're going to keep that in there, and that'll be our initial target area for a long positioning. Now I use these divergence reversals as purely as a trend reversal in terms of closing out trades. So in other words, if you're going short, that'll be an area to look out for and okay, stop it out if it does, or close out if you're in profit, to close it out there. If it's going long, in other words, if we're looking at a potential long position here and against the short position. So if you're going short, again, that'll be your area to look out for and stop it out. If you're going long, the actual reversal will happen, and that's where you'll have a bearish divergence on the CCI and a long divergence, a bullish divergence on the price chart, in which case you close it out if the price breaks to the downside. Up here we've got a bullish and a bearish backtest, and again, to avoid those average downs when the price is going against you, if you're going long, as I always say, you want to make sure you're always trading when you get back here, you can see there when it first entered those long positions when the price is going against you. That was back in April 22. So if you go to April 22, during that period, you can see there is primarily short positioning on our bias indicator on the daily, and April 22 primarily short signals on our weekly as well. So you would not have entered those long trades. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page, where we also do scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.